You know that feeling when you check your bank account and somehow, despite working all month, there is barely anything left. You are not buying luxury items. You are not going on expensive vacations. Yet, your savings account looks like a desert. Meanwhile, you see headlines about banks posting record profits quarter after quarter. Ever wonder how that works? Here is the uncomfortable truth. The entire financial system is designed with loopholes that benefit institutions, while keeping regular people like us running on a hamster wheel. And the craziest part? Most of us don't even realize we're in the game. Hey guys, I am Henry, and I've spent years obsessing over how money really works. Not the sanitized version they teach in school, but the actual mechanics of how wealth flows from your pocket into someone else's. I've made it my mission to break down these complex systems into simple truths that anyone can understand and use. If you are tired of feeling like you are working hard but getting nowhere financially, you are in the right place. I share strategies and insights that actually matter for people dealing with real financial pressure. If this resonates with you, don't forget to subscribe and hit that like button. Trust me, what I am about to share will change how you see every financial decision you make. Let me introduce you to a concept I call the wealth extraction system. It sounds dramatic, but stay with me. This is the invisible framework that traditional financial institutions use to consistently pull money from your wallet while making you feel like you are making smart choices. The wealth extraction system works through three core mechanisms: manufactured urgency, hidden fees disguised as services, and complex products that benefit the seller far more than the buyer. Understanding this isn't about becoming cynical. It is about recognizing the playing field, so you can actually win the game. The core value here is simple. Once you see how money is systematically extracted from regular people, you can plug those leaks and redirect that cash flow towards your own wealth building instead. Let me paint you three real-world pictures to show you exactly how this works. First, think about overdraft fees. Sarah, a marketing coordinator making $45,000 a year, accidentally overspent by $12 on groceries. Her bank charged her a $35 overdraft fee. That is a 292% interest rate on a $12 loan. That lasted 3 days until her paycheck hit. The bank didn't loan her money out of goodness. They structured the system so transactions process in an order that maximizes the chance you'll overdraft. They might process your largest transaction first, draining your account, then hit you with multiple overdraft fees. On smaller purchases that follow, Sarah paid $105 in fees that month on overdrafts totaling $38. Meanwhile, someone with a $50,000 cushion in their account never pays these fees. The system literally charges poor people for being poor, while the wealthy get free checking and rewards. Second example, credit card minimum payments. Michael has $8,000 in credit card debt at 19% interest. His minimum payment is $240 monthly, which feels manageable, right? Here is what the bank doesn't highlight. If he only pays the minimum, it'll take him 43 years to pay off that debt, and he'll pay over $20,000 in interest. That $8,000 debt actually costs him $28,000. The bank designed minimum payments to feel affordable while maximizing how long you stay in debt. Now compare that to someone who understands the system. They pay $600 monthly instead, clearing the debt in 16 months and paying only $1,200 in interest. Same debt, different understanding of the game. A $19,000 difference in outcome. Third scenario, new car financing. Jennifer just got a promotion and decides she deserves a new car. The dealership offers her a 7-year loan at 6% interest on a $35,000 car. Monthly payment is $483, which fits her budget. But here is the trap. Over 7 years, she pays $40,576. For a car that is worth maybe $15,000 after 7 years, she lost $25,000 to depreciation and interest. The bank and dealership love this because she is locked into payments for 84 months. Meanwhile, David buys a 3-year-old certified used car for $18,000, finances it for 3 years, and pays $19,800 total. His car is worth $12,000 after 3 years. He lost $7,800 instead of $25,000. Both people have reliable transportation, But Jennifer paid $17,200 more for essentially the same outcome because the system pushed her toward the option that extracts more wealth. Now, I know what you are thinking. First objection. Henry, I don't have extra money to pay more than minimums or buy cars in cash. I am barely surviving. I get it. I really do. But here is the thing. I am not suggesting you magically find thousands of dollars. I am showing you that the system is designed to keep you in that barely surviving mode. The first step isn't finding more money. It is stopping the bleeding. When you understand how much the wealth extraction system is taking from you through fees, interest, and bad deals, you can make different choices with the same income. Maybe that means switching to a credit union that doesn't hammer you with fees, or using a budgeting app to avoid overdrafts, or buying a car that is 2 years old instead of new. These aren't about having more money, they are about keeping more of what you already earn. Second objection, but banks are regulated. They can't just scam people. Right? Look, I am not saying anything illegal is happening. The wealth extraction system operates completely within the law. That is what makes it so effective. Banks lobby for regulations that allow them to charge these fees and structure products this way. It is legal to charge $35 for a $12 overdraft. It is legal to set minimum payments that trap people in decades of debt. It is legal to offer 7-year car loans that destroy wealth. Legal doesn't mean it is in your best interest. The system is designed by people with money to benefit people with money. Your job is to understand the rules they're playing by so you can make informed decisions. So what do you actually do about this? Let me give you 5 concrete steps you can implement immediately, regardless of your current financial situation. First, audit your bank statements from the last 3 months. I want you to highlight every fee you paid: overdraft charges, ATM fees, monthly service charges, late payment fees, everything. Add them up. Most people are shocked to discover they're paying $200 to $500 annually in completely avoidable fees. Once you see the number, open an account at a credit union or online bank with no monthly fees and overdraft protection. This single move can save you hundreds every year without changing your spending habits. Second, if you have credit card debt, stop paying just the minimum today. I know it feels manageable, but you just saw the math. Here's a simple formula. Take your current minimum payment and add $50 to it. Just $50 on a $5,000 balance at 18% interest, increasing your payment from $150 to $200 cuts your payoff time from 4 years to 2.5 years and saves you over $1,500 in interest. If you can't find $50, go back to step 1 and redirect the fees you are no longer paying. The money is there. It is just going to the bank instead of your freedom. Third, implement the 72-hour rule for any purchase over $100. When you want to buy something, wait 72 hours before purchasing. This breaks the manufactured urgency that retailers and banks count on. That new phone, those shoes, even that slightly nicer apartment. Wait 3 days and research alternatives. You'll be amazed how often the urgent need disappears, or you find a better option that costs less. This isn't about deprivation. It is about making sure your money serves your goals instead of someone else's sales targets. Fourth, automate your wealth building before you can spend it. Set up an automatic transfer of even $50 from your checking to a savings account the day after your paycheck hits. Make it automatic so you don't have to think about it. This flips the script on the wealth extraction system. Instead of spending everything and saving what is left, which is usually nothing, you pay yourself first and spend what is left. $50 twice a month is $1,200 a year. Over 10 years at a conservative 5% return. That is $15,500. You just created a financial cushion that protects you from the fees and emergencies that keep people trapped. Fifth, educate yourself on one financial topic per month. Spend 30 minutes reading about how interest really works, or what credit scores actually measure, or how insurance companies price policies. Knowledge is the only way to level the playing field. The wealth extraction system relies on complexity and confusion. Every topic you understand is one less way they can extract wealth from you. There are free resources everywhere. Libraries, YouTube channels that aren't trying to sell you something, personal finance blogs, Commit to becoming just 1% more financially literate each month. After a year, you'll make completely different decisions than you do today. Here is what I need you to understand. The system isn't going to change to benefit you. Banks will keep maximizing profits through fees and complex products. Retailers will keep pushing you toward debt-financed purchases. The wealth extraction system will keep running because it is incredibly profitable for those who designed it. But you don't need the system to change. You just need to see it clearly and make different choices. Every fee you avoid is money you keep. Every point of interest you don't pay is wealth you build. Every manipulative sales tactic you recognize is freedom you protect. This isn't about becoming a penny-pinching hermit who never enjoys life. It is about making sure that when you spend money, it is truly serving your happiness and goals. Not just feeding a system designed to keep you broke. You can have nice things, take vacations, enjoy life, and build wealth. But you can't do it while hemorrhaging money through the 1,000 small cuts the wealth extraction system inflicts on people who don't see it operating. The banks and institutions aren't evil. They're just playing the game by rules that benefit them. Now you know the rules too. You know how overdraft fees trap people in cycles of poverty. You know how minimum payments keep you in debt for decades. You know how financing depreciating assets destroys wealth. You know the game. Now you can play it differently. If this opens your eyes to something you hadn't seen before, do me a favor and hit that like button. Share this with someone who is struggling financially and can't figure out why. Subscribe if you want more content that cuts through the nonsense and gives you actual useful information. The financial industry has spent billions creating systems to extract your wealth. The least we can do is spend a few minutes sharing knowledge that helps people keep what they earn. You've got this. Now that you see the game, you can win it. Let's build some real wealth together.